Hello, my name is Kelsey Walker, and I'm an attorney with Legal Aid of North Carolina. Thank you for taking the time to tune into this video. In this video, we will be talking about steps you can take regarding your mortgage after a disaster. As with all of our videos, this is for information purposes only, and nothing in this video should be considered legal advice. So after a disaster occurs, there's a few steps you want to take if you have a mortgage. Obviously, the first step is that you want to make sure you and your family have a safe place to stay, which may mean staying somewhere other than the damaged property. Next, you'll want to take pictures of the damage to the property. Taking these pictures on your cell phone or digitally can make things easier down the road if you have to share them with someone, and more than likely you're going to have to share them with someone. Then you want to secure the home to the best extent you can. This may mean boarding up windows, hanging tarps, boarding up doors. The purpose of doing this is to prevent any further damage to the home. For example, if you have a hole in your roof, hanging a tarp can prevent further water damage. If your front door is broken, you may want to nail up some boards to prevent nefarious characters from coming in and vandalizing your property. Lastly, you may want to contact your mortgage company. This is a really important step and is not something you might readily think to do. If you get into the world of mortgages, it can actually be kind of complicated to figure out who owns your mortgage, but all you need to worry about is contacting whoever you make your payments to. Bank of America, Wells Fargo, Navy Fed, Shell Point, whoever you're used to dealing with, that's who you should give a call. I know very few people have warm feelings towards their mortgage company, so they may be the last person you want to talk to after surviving a disaster. But surprisingly, they may have a few ways they can help you. But they also need to know what's going on with you in your home to be able to help you. That's why communication is key. The first thing you want to do is let them know that you have damage. You actually have a duty to let them know about this damage because your mortgage company does have an interest in your property, and by agreeing to your mortgage, you have agreed to maintain it within reason. Reporting storm damage puts them on alert that something drastic and beyond your control has happened to the property. Also, if you are going to be staying somewhere other than the damaged property, let them know and give them updated contact information. Next, you'll want to understand how your insurance and mortgage policies work together. Sometimes insurance companies will send the insurance payout to the mortgage company, and you'll have to work with them to get the funds released for repairs. Generally speaking, this only happens if the damage is extensive and there's a large payout, but in rare cases, we have seen the mortgage company get sent the payout regardless. So if you're expecting a payout and have not heard from your insurance company, you should consider contacting your mortgage company. Lastly, you want to keep making payments, even if your home is destroyed and you are no longer staying there. If you think you will miss a payment, call your mortgage company the moment you realize you might miss a payment. Some of the reasons you may have trouble making payments after a disaster are that you need to pay for repairs, medical bills, hotels or alternate housing, evacuation costs, or you may be missing work because a business is damaged. These are all generally seen as expected hardships that follow a disaster and warrant some sort of accommodation from the mortgage company. But you want to make sure you're keeping records of these costs. Your mortgage company may want receipts or bank statements showing where you've had to spend money, or notice from your employer that your hours have been reduced or your work is shut down. So be sure to document what you're going through. One thing to note here is that sometimes survivors can end up staying places in under an informal agreement. For example, you might go stay with your friend and throw them a little bit of money while you're staying there. In that situation, you should get something from your friend in writing that acknowledges where you were staying and how much you were paying them while you're staying there. If you expect your inability to make payments to be short-term, you likely have a couple options, but again, communication is key. If you think you are going to miss some payments, call your mortgage company. Your statement should have a number listed on them to tell you who to call if you are having trouble making payments. The name of the department you need to speak with will vary by company, but often they are called loss mitigation, customer solution, or home retention department. Again, you want to call this number before you miss a payment and ask what options they have for borrowers facing a hardship. Let them know what you have going on and why you're not able to make your payments. Some options they may offer are late fee waivers, suspension of negative credit reporting, or a forbearance, though the options are going to vary depending on the company. Forbearance is the most common option offered in hardship situations, and a forbearance is an agreement between you and the mortgage company to temporarily suspend mortgage payments. This can be a really helpful solution because you will not be generating late fees and you can avoid a delinquency being reported on your credit. However, it is important to remember that a forbearance only delays payment. It does not erase any of the money you owe. So you need to remember and plan for the fact that you will eventually have to make up those payments. If you think your ability to pay your mortgage will be impacted long-term, you should be upfront with your mortgage company about it. If you are facing a long-term disruption, there are alternative solutions such as a loan modification or an interest rate reduction. You want to have this conversation with your mortgage company before you are 120 days behind on your mortgage, because at 120 days, you can be considered delinquent and sent into collections, which will have a negative impact on your credit. And again, if you are going to be out of your home for an extended period of time, you should let your mortgage company know, because if you are not staying in the home and then you start missing payments, they may think you have abandoned the property. If they think you have abandoned the property, they may start taking steps to secure or sell the home. I will note that this is pretty rare for them to think that there has been an abandonment, but it does happen and it can be easily be avoided if you're communicating with your mortgage company. So I'll say it again, communication is key. Also, as I mentioned this before, but even if your home is completely destroyed and you're not staying there, you should keep making payments as you are able to until you have discussed the situation with your mortgage company. The exact solution of what will happen there is going to vary a lot depending on your specific situation. Lastly, I'd like to leave you with a few general tips. As I said, communication is key, but that doesn't mean it's always easy, so be persistent. After a disaster, your mortgage company might be experiencing heavy call volume, or if you work with a local bank, they might have been impacted as well. So keep calling back or try to find an email address to contact online. Also, if you find a representative that is especially helpful or easy to communicate with, ask if you can have their direct extension or email so you can keep working with the same person. You also want to keep records of your communications with the mortgage company and your payment history, as well as any disaster-related expenses. Also, if you are unsure of your current status, contact your mortgage company now to see if you are current. Finally, if you are having trouble with your mortgage company, you can contact a HUD counselor. HUD counselors are available to speak to all homeowners and are there to help you navigate the mortgage world. They can help you figure out what documents you need to provide to your mortgage company or track down who it is you should be speaking with. In Eastern North Carolina, some of the groups that have HUD counselors are Twin Rivers Opportunities, Coastal Community Action, and Greenville Housing Authority. If you'd like to find a HUD counselor in a different location, you can call 1-800-569-4287 or visit hud.gov/housing counseling. And that is it for our disaster video this week. If you have a damaged property and have questions about your mortgage or would like assistance with disaster relief, you can visit our website at legalaidnc.org for more information, or you can contact the disaster relief team directly by calling the legal aid hotline at 1-866-219-5262 and dialing extension 2657. Thanks again for watching.